Hey everyone, welcome back to my channel. Today we're going to explore the fundamentals of stock options trading. So whether you're a complete beginner or you're just looking to enhance your knowledge of the basics, this video is going to have everything you need to get started. First things first, what are options? A stock option is a financial contract that gives you the right but not the obligation to buy or sell a stock at a predetermined price by a specific period of time. There are two different types of options: calls and puts. A call option gives you the right to buy a stock at a specific price known as the strike price before the option expires. On the other hand, a put option allows you to sell a stock at a specific price before the expiration date. So let's break this down a little bit further. If you're buying a call option, that means you're expecting the stock to go up. If you buy a call option with a strike price of 50 and the stock rises to 60, that means you can buy the stock at 50 and sell it for a market price of 60, instantly making a profit. If you're buying a put option, that means you're expecting the price of the stock to go down. For example, if you buy a put option with a strike price of 50 and the stock price falls to 40, that means that you can sell the stock for $50 even though the market price is 40, and you can still make a profit. In both cases, the cost that you pay for an option is known as the premium. This is the cost of having the right to buy or sell a stock. If the market doesn't move in your favor, your maximum loss is limited to the premium that you paid for the option. Now let's discuss some key terminology that you'll need to know. The first one being strike price. The strike price is simply the price that you're able to buy or sell a stock. Next is the expiration date. The expiration date is the date that the contract expires. After this date, the contract is considered worthless and no longer valid. The next term that you'll need to know is in the money. A call option is in the money if the stock price is above the strike price. A put option is in the money if the stock price is below the strike price. The next term you'll need to know is out of the money. A call option is out of the money if the stock price is below the strike price. A put option is out of the money if the stock price is above the strike price. The next term that you'll need to know is at the money. A contract is at the money if the stock price is equivalent to the strike price. For example, if you have a call option with a strike price of $50 and the stock price is $55, then your option is in the money. Options trading can be used for various purposes, including speculation and hedging. Speculation is simply when traders buy options to profit from expected price movements in the underlying stock that they are trading. Because options can provide significant leverage, they can also provide a significant return with a very small investment. Let's talk about hedging. Long-term investors use options to protect their existing position. For example, let's say an investor is holding Apple long-term, but they see a potential downside coming up in the next few weeks. They can buy a put option to limit their downside risk. With speculation, you're looking to make money from price movements. With hedging, you're simply looking to protect your investments. One of the most appealing aspects of options trading is the flexibility that they offer. There are various strategies you can employ, from simple to complex, depending on your risk tolerance and your market outlook. In future videos, we'll dive deeper into more advanced strategies that I use personally to make money in the stock market trading options. To sum everything up, stock options can be a very powerful tool for speculating on price movements and protecting your investments. Understanding the basics of calls, puts, and the different terminology that we talked about today is the first step in the right direction of becoming a successful stock options trader. Thanks for watching and happy trading. Be sure to check out the links in the description for more resources and to join our trading community. See you next time.